I'd like to provide a bit of an update on the 2026 federal budget announcements and the progress of those. Where are we up to? Probably the big three that I really want to talk about are negative gearing, capital gains tax, and discretionary trusts. The key thing to remember here is that two of these have now been legislated. One is still in progress. As I've said probably 1,000 times over the past few months, the devil is always in the detail. But we're getting closer. But particularly with the trust changes, we're definitely not there yet. In terms of that negative gearing, this has been passed, it's legislation, and as of 1 July 27, negative gearing on property is only for new builds. The key date here is the 12th of May 2026. Any property acquired from 7:30 p.m. on budget night is grandfathered. If you own property prior to that time, the old negative gearing rules continue to apply. Anything acquired after budget night, you can still negative gear through to 30 June 27, but from 1 July 27, if it is an established property, those losses are no longer deductible against your salary and other income. For negative gearing to continue under the new rules, we are effectively talking about new builds, so it is a significant change. Again, this is not proposed anymore. It may or may not happen. It is legislation. And we'll see from here how it all transpires in practice. The second of these big three relates to the capital gains tax changes. These two have now been legislated and come into effect 1 July 27. The important thing that people need to understand here is that capital gains accrued on assets up to 30 June 27 remain subject to the old CGT discount rules. So if it's been held by an individual for more than 12 months, up to 30 June 27, we still qualify for the 50% discount, regardless of whether that asset is sold pre or post 30 June 27. If you retain that asset beyond that date, you're going to need to establish the value as at 30 June 27. It's going to be really important for assets that have had significant capital uplift. From that point, the old regime effectively stops. It's indexation moving forward with a minimum 30% tax on the capital gain. But all is not lost. It is not the case that anything sold after budget night gets taxed at full freight. There is the transition period, and it's not quite as dire as the commentary might have sounded on or after budget night. In terms of discretionary trusts, this is the big one. This is the one that has not been passed, and it's going to linger for some time. These changes are proposed, and they are proposed to discretionary trusts. My view overall is that they are going to happen. The minimum 30% tax rate on discretionary trusts is going to happen. At the moment, they're proposing that it'll apply from 1 July 28, so we have another year before it kicks in. The federal government is proposing allowing restructures of these trusts, and the restructure itself is probably not the hardest thing. The mechanics of that may be fairly straightforward. You might have a trust with a corporate trustee. The restructure may effectively mean that the corporate trustee itself becomes the business entity or the asset holding entity. From a tax perspective, there will obviously need to be rollover rules and mechanics around how that all works. But I don't necessarily think this is where the difficulty lies. Where the rubber will hit the road is with regard to property. There are many, many discretionary trusts around Australia holding significant property assets. And this is where the federal government is going to need to cut deals with 7 states and territories. And here we get into stamp duty and land tax territory. The practical problem. Say a discretionary trust owns a property. The trustee company will already appear on title, but legally it is holding that property in its capacity as trustee for the discretionary trust. It is not currently the beneficial owner. Under the new arrangements, it is likely to need to transfer to that trustee company. From a state government perspective, that is a transfer of property, and it is likely that stamp duty will apply unless a deal is done between the state and federal governments. However, one of the key things to note here is, let's consider New South Wales. A discretionary trust does not receive the land tax threshold, where a company does. So from the Revenue New South Wales position, the federal government says we want taxpayers to restructure out of discretionary trusts. Fine. Revenue New South Wales may then say, well, hang on, no stamp duty, and now the company gets the land tax threshold. There is zero chance that Revenue New South Wales is going to say, no worries, we will lose on both sides. They are currently collecting land tax from the discretionary trusts. And this is where the deal is going to have to be done. Rubber will hit the road in those negotiations. And this is why they've given themselves a couple of years to work their way through these changes. The federal government has one objective, while the states and territory have their own revenue bases and their objectives. They don't necessarily line up neatly. So where are we today? Negative gearing, passed and legislated, effective 1 July 27. Capital gains, passed and legislated, changes effective 1 July 27. Discretionary trusts, proposed start 1 July 28, but the practical implementation is yet to take place. And now we consider, what if the government changes? A lot of people are asking me, what if another government gets in? I think the first thing we need to note here is that we don't provide advice based on the ifs, buts and maybes. It's a terrible way to give advice. But my view on what might ultimately be reversed if a Liberal government got in, they may revisit the negative gearing changes and they may revisit the capital gains tax changes. But I don't think that they'll unwind the discretionary trust changes. Governments on both sides have been talking about these discretionary trust changes for as long as I can remember. This issue has been floating around in one form or another for basically my entire career. I do think those trust changes are coming, and I do think that they'll survive a government change. So 2 of the big 3 are done. They're law, and the third is being worked through. With regard to those trust changes, the devil is always in the detail. We're going to keep working our way through it, and as more detail comes out, this is where the planning decisions start to become clearer.